on his computer. So the things I share with you guys today, I mean, unless you're already doing it, which and you are, that I mean, it's great. It should really open your mind to money can be given like 1,000 different ways. There's no
Yeah.
specific way to do it. So that's the exciting part is the more capital that we have, the more opportunity we have to tackle projects, right? Man, admit all. We just need to set it up to where people would just get in. How's everybody doing?
Good.
Good. All right. I love to hear it. So does anybody have any experience borrowing money from people, not banks, not a hard money lending company, people? Has anybody borrowed money from people before? Not $20 in I borrowed $20 from my cousin back 2 years ago. I never gave it back. No, not that. Go ahead, Jasmine.
Yeah, I have.
Okay, so tell me about that experience.
Um, you know, for just it was just really for a flip. So we just said, hey, we'll give you 15% return on your funds in a certain period of time. So there's multiple facets to this to this experience. It ended up being my husband's parents in the end. We had a person that we typically wholesale to who was gonna give us funds for a flip. Her and her sister were going to go for it, but it was around the time of the Synovius bank crash in California, and her sister was in finance, so she kind of pulled out at the last minute. So so we ended up self-funding it mostly through credit cards because we had already far enough along in the process, and we're going to have the contractor start that week coming up. So for her, we had like a little promissory note. She actually wrote it herself. We had never really dealt with funding through hard money or through banks. So for us, it was like, okay, she set herself up to get paid less than what we were going to give her, because we mean 15% return total on your investment, not 15% divided by 12, and we only need it for 4 months. So whatever that adds up to is kind of how her contract was set up. So anyway, but long story short, my husband was like, I ain't borrowing money from nobody ever. We just gonna do it ourselves after that, because you get to the point you like right there, and then it was just not reliable at that time. But there is that thing like when we talk about having proof of concept, like, okay, well, here, this worked well, let's do it again. So we've done 3 different other flip situations with his mom invested, and we just said, hey, we'll give you the 15% return versus this other person. So that's kind of how it's been working for right now.
Okay, great. All right. So you touched on something and I loved it. Your husband said we ain't never borrowing money from people again. And I have a young man who we bought this auto shop, and I wanted to give, he's one of my construction guys, loves working on cars. Wanted to give him an opportunity to use our auto shop, or at least half of it. And I was going to own a percentage of the business. We were going to develop out the sales team for him to just go work on cars. And when I showed him the amount of money that he would need to borrow on the short end just for the first year going in, it scared him. And what he said to me was, like, nah, man, I ain't the kind of guy who, wants to be like borrowing money from people. I'd rather go like get it from the bank, and, the bank will give it to me, and I'd rather do it that way. I'm like, brother, the bank doesn't know you. They don't care about you. You don't have proof of concept. Your business right now, because you're not reporting income on this little side gig, mobile mechanic, this is what the bank thinks it's worth. Nothing. They give you zero. And I said to him, and if you don't make a payment to the bank, what do you think the bank's going to say? I told him the bank's going to say, we don't care who you are. We don't care what happened. We just want our money. But when you work with people, I can work with Jasmine, and Jasmine could know where we're at in the process on this house, and we agreed on 8 months, and we're getting to month 7, and we know we're not finished. We're about to be done, but this house probably ain't going to sell by the 8th month. If Jasmine knows, the process and how things have been going, she's expecting my call in month 7. Hey, Jasmine, is where we're at. I'm happy to pay a penalty. I'm sorry to even mention it, but I'm not going to avoid you just because I have bad news. I'm always going to answer when you call, and I'm going to call you if I got something that's just not great news. Great news is house is coming along. It's beautiful. Bad news is it's taken longer than we thought it would. I need a 4-month extension. Who's going to give me a 4-month extension, Jasmine or Chase Bank? Jasmine is.
Mm-hmm.
And that's what I told this young man. But ultimately, when he looked at how much it was going to cost him in stress to borrow money to start building out his business that I was going to be a partner in, so like, I'm going to make sure we're good. He was too nervous about it. He just couldn't do it. And here's what I said to him, brother, this might change, but right now we're learning something about you. Here's what we're learning. You, hang on, I'm going to mute you, Chris. You are not ready to be an entrepreneur. You don't got the unction, that umption. There we go. You don't got it hurts a little bit. I'm feeling a little nervous. When you wake up in the morning, if you don't feel anxious enough to go to the bathroom and sit in there, and if you're not crying a little bit, once every 2 months, like then you're not pushing yourself in your business, right? We're not talking about doing anything crazy, but we're pushing ourselves. So I'm going to give you a nugget. I want somebody to mention it in the chat so everybody can remember this. Not all money is good money. I'm going to say it for you again. Not all money is good money. Here's why I tell you that. Because Jasmine had it set up where they were going to get some money from family. They pull out at the last minute. Now they're having to go out and, use credit cards to like push things.
Oh, wait, pause. So the family is not the one that pulled out. The person I typically wholesale to is an outside. It's just like a regular investor we invest in.
Yeah.
Well, they're the ones who pulled out. My family was there for it. So anyway,
okay,
keep
good.
going.
All right. I'm glad you honor your family. My bad. Not all money is good money, meaning we don't need money with lots of opinions. And we need to know where they're getting this money. Where are they taking it from? What if they're embezzling it from a business that they're involved in over here to turn around and give to you? Guess who's going to be included in that lawsuit? Well, the person that they were turning around and giving that money to. So not all money is good money legally, and not all money is good money because sometimes people think that they get to be in charge of you because they lent money. I had a lady lend me 40 grand to do a little Canyon Lake mobile home deal that we made 25,000 on. And she told me when she gave us the money, I am so excited. When are we going to go pick tile at Lowe's? I said, whoa. You're lending money. You're not picking paint colors and tile and flooring and doors and trim. You're going to make a return on your money. It's me who's going to be handling all that. And we've already picked that stuff. And so we need to set proper expectations with people so that they can show themselves. Guys, when people show you who they are, believe them. Believe them. They're showing you who they are. Not all money is good money. Having said that, let's jump into the trust factor and raising private money. As I'm blowing through this, you are welcome to raise hand, unmute, ask questions. Mark does not mind being interrupted. You are welcome to do so. If the question you're asking is very specific to you, I may answer it quickly and say, let's talk after, or reach out to me after, or I may pass you my number. You can give me a call or something like that. But as long as your question is general enough where, it's a big nugget for everybody in the room, I'll go ahead and give you a full answer on it. Having said that, are we ready to do this? I know I am. Let me share screen. Here we are, share screen. And share. Let me see. Make you guys big so I can see everybody. Okay, so can everybody see this right here? Everybody can read it good. It's not too far away. I don't need to zoom in, do I? The trust factor in raising private money? Okay, good. Here's what you need to know. There are some internal questions you should be asking yourself when you're thinking about asking someone to give you $500,000 in capital to go out and liquidate other people's properties, right? Number one, are you knowledgeable enough to be trusted with money? Okay. Am I knowledgeable enough to be trusted? Meaning, do you know what you're doing? If you have never invested in real estate before, if you had never renovated a house before, should you go ask Diego for $750,000 just because you're great at the pitch? No, because brother, there are steps that we must take. People try and skip hard parts. When you skip hard parts, you shoot yourself in the foot. Gurus like to say this: wouldn't you rather take the elevator to where you're wanting to go? Let me tell you what they mean by that. What they mean by that is, you're paying me to show you exactly all the crap that I had to go through and shoot myself in the foot getting to where I got. So you're getting to learn through their experience, through their mess ups, exactly how to do something right. People often mistake that as, I'm gonna skip steps to try. If I can already get 750,000 now, why not just go get it right now? Go raise it right now. And the answer to that question is because you need to know how to be a good steward of one house you're flipping before you flip 4. You need to know how to get a good wholesale deal on 2 before you go out and go purchase a property. So when it comes to real estate, are you knowledgeable enough to be trusted with money? I think the better question would be, how many houses have you wholesaled? And go back and find those houses. How much profit did they make on that house when they sold it? What they listed and what it sell at on Zillow? You run those numbers, there's a little bit of closing costs in the middle, but if they made 30, 40, 50, 60, $100,000, you left meat on the bone for them. You're a great negotiator. So are you knowledgeable enough to be trusted with money as it pertains to capturing equity in the conversation, getting a property at a low amount? Yes, you are. Maybe not necessarily in a flip. I always tell people, when you've never done a flip, you should consider offering more to somebody who has done a flip. Kyle, let's say Kyle's done 150 flips. Mark's never done one, but he's got this great deal, 4-house project. I'm going to go to Kyle. Yes, I could go to Jasmine, who just, she likes me. She trusts me. She's willing to give me $350,000 to go get all those houses and the 100 I need to renovate them. But you see, Kyle has the money and the experience. Jasmine's going to cost me 15% APR on a 1-year term. Kyle's going to cost me 40% of the profit. If I've never done one before, I should at least seriously consider giving Kyle 40% on the first one. Because Kyle has done it. He's got a proven track resume. He knows the pitfalls you're going to go up against, and you're going to get to learn in real time how to do this. So internal questions we're asking ourselves. Number 2, am I certain that I won't lose this person's money? You can never be fully certain, but the more the deals in the discount, so the cheaper we can get something, the more certain we can be that we're not going to lose their money. If I know 65% minus a very conservative repair puts me at 115,000, and I still negotiate to get this property at 80, wouldn't you say I'm putting myself in a very comfortable position for things that may go wrong in that renovation? I am. So we ask ourselves, am I certain that I won't lose this person's money? 3, do I have the right people in place to help me steward the work that needs to be done in order to give a good return to my investors? When you borrow money, it's not about you. It's about your investors. I have done deals. I'm a negotiator, guys. I've done deals where I told Diego he was going to get $15,000 on this deal, and it didn't work out the way it should have. And I'm now only going to make, 15 grand myself, and I thought I'd make 30. I could go to Diego and get him to make 8, so I could have a little more of that 15 I promised him. I could, and he might would say yes. But you know what? I would rather not make money to make sure Diego got the return that I told him he was going to get. So that when Kyle calls Diego as a reference and says, what's your experience been working with Mark? Diego's going to say, we've done 5 or 6 things together. I've had a great experience. It's very passive. He's handling all of that. And I have gotten what he said I would get. I want to tell Diego, hey, when people call you for reference, I'd love for you. I hope you think this of me, but I'm just going to say it. I hope you'll say to them, Mark does the things he says he's going to do, even when it's uncomfortable for him. Those are the kind of people who hear that are going to want to give you money, right? So another question, have I considered working with a shark on a couple business ventures first? That's where I mentioned sort of that situation where I could take Jasmine's money at 15%, or I could take Kyle's money and give him 40% of the profit. If I've never flipped a house before, it's a higher risk. Higher risk means the person making the risk should make more money. The better we get at something and more experience, the cheaper our money becomes. When I started, my money cost me half the profit on a flip. Today, my money costs me 7 or 8%. No origination fees, no extra fees involved. If I'm borrowing $250 to buy and renovate, they're not giving me the $250 in draws. I'm walking out of the title company with $80,000 wired in my account to start work tomorrow. And half of my people, they don't take monthly payments. They let it accrue, and I don't pay them until I sell the flip. So now I'm not even paying a monthly debt service on it. You see the difference though? What did I do to put myself in a position where I could command 8%, where I could command cheaper money? I gained experience. The less experience you have, what? Let's be reasonable here. The more you got to give up, because you don't know what you're doing. But if you know what you're doing, your money gets cheaper and cheaper and cheaper and cheaper. When I pushed it to 8, I thought they were going to say no. I don't know, man. At some point, maybe 2 years from now, I don't know when I'll do it. I'm nervous to. I might try and push it to 5. 5%, no origination fees, but I'm gonna let you go to at least 3 Spurs games a year, and one of them can be the Lakers. Like I'm gonna start offering things like that. Like you can go use that RV we got set up at that luxury RV park over in Port A, but I'm only giving you 5%, brother. And so we get to push our money down and make it cheaper based upon the experience we're gaining. So if you're not asking yourself these questions, am I knowledgeable enough? Am I certain I'm not going to lose this guy's money? Do I have the right people in place? If you're not putting your lenders first when you're making these decisions on these properties that you're taking down, my friend, you are not ready or worthy to ask somebody for $200,000. To be worthy, you got to do the thing you said you would do. To be worthy, you got to put your lender's interest first above your own. Okay? Because even though it's not your money, you need to treat it as if it is. I treat my lender's money with more honor than my own. Like I'm a risk taker. I'm happy to risk 30 grand on a business venture where I know sort of what's going on there, and it's possible, I might not get the return that I thought I'd get. But I would never risk Nicholas's 30 grand. I'm gonna put Nicholas's money to work with me because I know I'm gonna do everything in my power to not lose Nicholas's money and to give him the money that I said he'd make. Having said that, you guys are gonna get to see business loan docs. You're gonna get to see an idea of flip and how I'm like sending it out and marketing those out. So as you're sitting here and listening to this, for some of you, you might hear this and think, man, this doesn't really interest me. I wish he'd talk more about. You're going to get to hear that stuff, but you need to know this is the bread and butter, what I'm showing you here. You got to get this part right. Okay. External things you should cover as you present an opportunity. Number one, value. This opportunity is a much better return than the average return in stocks. If their stocks are giving them 6, 6.5, you got to beat that. Okay, especially starting out, you got to beat it. Trust. This is a chance to work with a small business owner and to know how your money is being used, to have the ability to call the owner if you have questions. You can't do that as a minority shareholder in a large company. You don't get to call Apple and say, how'd the meeting go, guys? I just noticed the price per share went down $3. I'm mad. What are we doing about this? You'll be like, who's this guy? They don't know you. They're making decisions based on them. 3, security. Every agreement made is fine-combed through a professional real estate attorney and written up in a way that protects your interests as well as mine. We are not in the business of ruining relationships. Many of you like to pinch your dollars on the things you shouldn't. You want to pinch your dollars when you go buy clothes and shoes. You want to negotiate to get that car at the dealership cheaper? Do it. Do it. And in sales, push the number down as far as you can. In sales, push the number down as far as you can. In trades, you pay good trades what they're worth. Don't knock down your plumber, your electrician, your attorney. Pay your attorney, guys. They're going to be the person who brings you the most money. I'm telling you, they're going to be the person who brings you the most money. Okay, integrity. We do business the right way. Please call these 1 to 3 references from business professionals here in our community that have invested money with us and have had a very good return. All our repeat partners, and would be happy to take your call and talk about their experience with me. So you might say, Mark, I've never flipped a property, so I don't have references. I don't have case studies. To that, I'd say, the next wholesale deal you sell, tell them, hey, I'll give you an extra $3,000 off, but I want to be involved in the flip, and I want to be paid $1,000 on it. And I want to get to go and see what happens. I want to understand how it works. I want to be involved in it. But you're going to pay me $1,000 on it. But I'm giving you a $3,000 discount. You can do that so that you can then joint venture in on a deal. And now you get to say, I took part in these 3 flips with these folks and I'm the one who found the deal. I'm the one who got the discount on the amount that it cost. This is what they made on it. I helped make that happen. And I got to be involved in the trades we were using and all of it. I got to ask good questions. So you're building up people who can say, yeah, we flipped a property together. Yeah, we flipped real estate together. Bought and, cleaned it out and sold it, however you do it. From there, you start to build business relationships. Now that I've got a proof of product or a case study, now I go to Jasmine and say, here's 2 wholesale deals I did. Here's 2 flips that I was involved in. I wasn't the main partner on them, okay? I was a very, very much minority, but I was involved in what happened in these 2. In these 2, including these others, I was the person who got it at a discount. This is what I made. This is what I could have made on these ones that I just wholesaled. So I want you to know you're talking to somebody who understands the importance of knowing the value of the property and pushing the number that someone buys an acquisition down. I push it down. Having said that, I would love for you to be a lender on this property. And I'd love to make you money better than what you're getting in that CD you got with Security Service for 7 months. Now, all offers we make should be lucrative compared to normal investment standards starting out. They should be based on shared values, beliefs, and trustworthiness. Don't work with people who are crummy people. Lots of sharks out there are crummy. Guys, I have turned down money and opportunities from people who I felt in my discernment, we don't have the same values. You lie a lot. And I know you're lying because I'm in the same business and there's no way X, Y, and Z happened in this Instagram video you put up. I know that property. I know where it is. I know half the people who bought in it. I know all this stuff. I know the city engineer that you had to work with to subdivide it. I can't work with this person. I might be loving towards them. I'm going to be kind. I'm happy to go out to eat with them. I'm happy to give them my thought on something. I'm happy to ask their advice on a land subdivide that I'm trying to do. But if a person is showing you y'all don't have the same shared values, beliefs, and trustworthiness, don't partner with that person. Don't take that person's money. Because money comes at a cost, right? Now, what's your typical deal look like? Like this. Hey, lenders, I just sent out a deal. There's a picture of a dilapidated house. Address is 937 Avenue K in Poteet, Texas. I'm picking it up. Where did I pick it up at? Oh, 52,000 purchase, budget of 58,000. So I'm all in at 100. I need 110,000. I'm willing to pay a 2% origination fee and then 10% annual percentage rate and interest. So we're looking at a 12% all in on a 12-month balloon. I give them some comparables. $67 per square foot rehab. You take first lien on property. All docs will be written up by a real estate attorney to protect each of our interests. 3, property will hold insurance at day of closing. Okay, so here, let me show it to you right there. Some of y'all, if you want this, Nicholas, or anybody who wants this, okay, let me say this. Most of the stuff I have, I will just give to you in the school community. I will not give business loan docs though, because those aren't mine. Those are created by the attorney, so I ain't giving it. Call the attorney. But stuff I created in Canva, templates, my owner finance Excel sheet formula, happy to share that stuff with you guys. So just ask me about it or ask for it in the school community. So if you want that, just mention it. I'll shoot this sucker in there for you guys.
Yeah, send that over when you get time, man.
Yeah, I'll put it in community. You just remind me. All right. Now, what kind of loan? So that's your typical real estate loan, right? But let's say Sam has been, landscaping for a long time, and he's built up, man, Sam's killing it. Sam needs to get a new truck, a longer trailer, another zero turn, a couple Echoes, maybe even wants to invest in adding pressure washing to the home services that they're doing. Why not go to Jasmine and say, hey, Jasmine, I've been running this business. Here's some information on it. Here's the kind of deposits that I'm getting in. These are people that have signed up on a regular basis that I'm coming in and I'm cutting their grass. I want to borrow $35,000 on a 1-year term at 12%. But I would like an option for an extra 6 months for a 1% fee, just an origination fee for extending another 6 months. Here's what I'm going to do with the $35,000. So now I'm telling you something different. I'm talking about what I call an unsecured business loan, okay? So in an unsecured business loan, you're looking at this. For this one, it's $35,000 borrowed on a 1-year term at 12% APR, all right? I'm paying this APR in monthly payments. All money is due by 12 months of term. At month 9, if borrower and investor agree, a renewed 1-year contract can be granted at same terms. You could also change terms to 10% if you wanted, or 8%, or 7%. Okay, I'm gonna show you something that I was really excited about when I did it. Okay, it's my first big, just basically sort of, it was collateral based because I own some property. We'll get to it in a second. But this is unsecured, an unsecured business loan that I got 12% interest only payments on 35 grand. So some of y'all, you're getting into real estate, but there's this other business that you're running and you're looking at this, you're like, man, I'm not in a place where I could just go buy all these things on credit because I'm, refining houses also. I need to get money to help start and fund a business. I need to get money to help grow a business that I have. How does that break down? $35,000 at a 12% APR is $4,200 a year. $4,200 divided by 12 is $350 a month. $350 a month of interest only, paid every first of the month. No early payoff fee. If we decide to ask for a payoff for the $35,000 sooner than 12 months, we have an option to do that, meaning we can pay her off sooner. The rate at which we are paying to borrow this money is $11.50 per day. All extra details are worked out with a real estate attorney and document is drafted. Ready? I offered this to a lady and she took it. And then I got bold and said later, I want to do $100,000 on a 15-year note, 4% interest. And I'm just going to pay her off as a loan over 15 years. And she took it, guys. So when I tell you building credibility, being a person that can be trusted because you're honoring others, you're putting them first, puts you in a position where when you run into a great opportunity and you vetted it and you know it's good, you're going to get $50,000 to jump in on this deal that you're getting ready to do. You guys can just give me a I see if you can see, like, money is more than just property. You can use capital to do all kinds of things. You can use capital to leverage yourself into an apartment deal where you're the shark. Oh man, dude, we're trying to knock down this apartment, but we need $100,000 down. We still need $35,000. Well, I got $35,000, but I want half ownership of that apartment that you're taking down. And I would like a chance to buy you out at X% after a 2-year mark. That's what my $35,000 is going to cost you. You put in that 35, they put in the rest of it. They found the deal. You own half the value of this, 30-unit apartment that they're taking down. So you see how when I tell you, like, even on the unsecured side, there's some benefit to doing this, okay? I want to say in this recording, I am not an attorney. I am not a professional in SEC compliance. You should speak to an attorney as you're thinking through raising money. In fact, I'll even say I've come up with all kinds of ideas to raise money. These are the ones that my attorney told me I'm allowed to share with you. Because half the stuff I say, she's like, don't do that. Don't structure that way. That puts you in a bad position. So we want to be speaking to our attorneys about this stuff. All right. Other offers. Sometimes you may jump into something that, the deal, the raising the money, it becomes easier when you've got a great deal. We did a development loan, okay? 21 acres, 11,000 an acre, 231 in, no money down, payments of $19.25 per month on a 12-year term. All payments may go towards principal. Option to pay in full over time or convert remaining amount into a 24-month loan with a 12% APR, yielding a monthly payment, and I got the details in there. 3, interest-only payments made at start at month. Release of lien is filed as the remaining amount is being borrowed by STX. So, like, the seller cannot request to convert the loan to unsecured business loan for the first 18 months. I was paying them. They wanted to give me back that money as a loan. I really wanted to take this land down. So we figured out a way to do it we did a sort of a hybrid of this. Guys, do you know what this property sold for? This property netted $330,000. 85 acres. He's given me all his frontage on one road, subdivided it out, 0.77 acres, 1 acre, 7 acres, 0.5, 0.7, 0.5, 0.7, 0.5, 0.7. I went to Titan Factory Direct, where they have the best salesman. I said, hey, some of y'all's mobile home people, right? They need land to put their property in, to put their houses on, right? Yeah. I got these at 11,000 an acre. We sold these at 59,000 and 79,000 per lot. Now, there was a water study, and we had to pay McCoy $40,000 to get water there. AEP covered the electric poles. So there's other things that are, kind of involved. But when it was all said and done, the gentleman that I partnered with in this, who had experience doing this, the net on this deal was over $330,000. So the deal is in how you structure it. The deal is in how much equity are you capturing. And then separate from real estate, if there's other things you're doing that you know what you're doing, you have extensive experience in, there's opportunities in that where you could raise money unsecured. Now,
real quick, so what is this, the 0.4, you can't request to convert the loan to an unsecured business loan for the first 18 months? What's that about?
Okay, so I did this deal 2 years ago. So let me remember in my head how I structured this.
Gotcha.
Okay, so basically, we agreed at 231,000 for the 21 acres. We were doing no money down, and we were going to make payments every month of $19.25 on a 12-year term. Okay, all the payments made are going to go towards the principal. That was an option that we talked about because he was more concerned with not wanting to pay a bunch in taxes in the short term, but he wanted monthly cash flow. As we were having this conversation, he's like, well, wait a minute. What about interest only? I know that's something you offer people. What if the 231,000 I make off this property, I just give that to you and you use that for whatever your real estate dealings, and you give me an interest only return on that? So started having a conversation. Well, maybe so. I got to think through that. So we had an option to pay in full over time or convert remaining amount into a 24-month loan with 12% APR, yielding a monthly payment based on interest gathered over 2 years. So example, $196,350 at 12%. We're going to pay him interest only $23,562, which is $1963.50 per month of interest only payments. So I was giving him an option. We can do this on a 12-year term. We could do this if really that's what you're looking for. Interest only payments made at start of month. Release of lien is filed as the remaining amount is being borrowed by STX Home Solutions. Okay, I'm remembering this now. The remaining amount is being borrowed by STX. Oh, I was positioning myself to not have a lien on it because I needed another 75,000 to develop this so that we could sell it to Titan Factory Direct. And that partner did not want to have a second position lien. So I was converting the borrowed money to interest only money so that there was no lien on it, so that the developer who did this subdivide, who's done a bunch of these, could invest money and take a lien on the property and have an interest, so he could help me finish out the development so that we could sell for a profit. Does that make sense? Here, I'll state it again this way. I offered Jasmine 12-year term on $231,000. As we are getting ready to break down this deal and I'm realizing I may spend $100,000 in development on this and I didn't have it, I came back and told Jasmine, listen, I want the ability to convert this into interest only, which is what you wanted in the first place. My only request is that we take you off as a lien and we find another way, maybe put you on a lien on other stuff. So I had other properties that I had owned and said, let me put you on a lien on some other stuff instead. So that my developer guy felt comfortable that it was just him and I on that deal. Kind of risky. Wouldn't recommend it for your first one, guys. All loans with any lender can be situational. A lot of times it depends on what their needs or worries are. Can you fill that need? Can you becoming an investor, can becoming an investor with you make them some extra money per year to afford that vacation they always wanted to go on, or pay off the car? You don't know what someone wants until you identify who they are, what it is they're looking for, cast a vision on what would it look like if we could accomplish that, and come up with a plan. How can we execute that? What is how would this be a priority if I could put that together for you? I might, in conversation with Jasmine, who's thinking about being a lender, find out he has $100,000 sitting somewhere and her husband's about to spend it on a brand new Toyota Tundra. And she feels bad about that because that money will be gone forever. And she knows that that Tundra is just going to be worth less and less over the years. She's losing money. So I say to Jasmine, well, have you thought about how much you would want to make per month on that in interest? So your principal never goes away, your 100 still exists. What would you want like a monthly payment to look like to you on that if I kept it on a 3-year term? He might think, hey, well, the truck salesman said $700 monthly payments. If I can get an extra $200 past that, I'd feel good about it. She may come back and tell me, well, I want $900 a month on that $100,000 that I'm giving you. And then we negotiate from there. And I've done deals where it was simpler than that, where someone gave me $100,000 and they were okay with just $450 a month, interest only, and they made me promise to do a 3-year term. So I'm like, all right, I'm doing a 3-year term. I'm borrowing their 100. It's secured by as a option to be a second lien on some of the houses I already own. Sure, I'll take that money and start a construction company. So I did. Now, my most recent one that I did was a couple who said, I'm showing this to you. It's a prom note, okay? They said to me, we want to give you money because we want to make interest off of it, and we want that to be a second income to our family. Okay, cool. How much do you want to give me? $500,000. Okay, I'm not tying that $500,000 to a specific property, but it will have the ability to be cast as a lien on all the properties I own, and for some reason I stop paying. Okay, that sounds fine to us. Okay, CJ, write it up. $500,000. I'm going to give them 10% interest only on it. It's at least 3 years that they're not getting back for 3 years. Okay. If I default, it comes to 15. I think there's a typo there. It says 17%. But here's how it breaks out. I now have an influx of $500,000 that I can use as like almost like a line of credit, but I got to be using it, right? I'm going acquiring, I'm liquidating stuff. I'm, finishing off that deck at this house to go do this and whatever it is that I'm doing. I'm borrowing this 500 for them on a 3-year term at $41.6666 per month. Every month they're getting a check for $4,166.66 every month for the next 3 years until I give them back their principal, which there's no late penalty. I can give it back to them sooner. Principal amount, $500,000, due and payable on July 1st, 2027. And then the promise to pay and the specifics in that. I use this to leverage myself into a situation where I could tackle something big that was coming up. Really two things that I've been looking at. One is most recently 16 properties altogether for $260,000, which is worth double that, at least at 70% worth double that. This person really wanted to give me money. So I said, okay, fine. I'll give you 10% on 500 grand over 3 years. You don't have a specific lien on a property. And they took it. So going back, trust factor and raising money. Be honorable. Know what you're doing. Learn to know what you're doing. Don't take on something you've never done before. If you are, let a shark be involved. Somebody who's done it before. Even if it's giving up more than you want to on the front end, because you want to make sure you protect the person's money that's been involved. Or if possible, get the shark to use their own money. You found the deal. Any questions?
You talk about going with the shark. Do you go with the shark because he's going to assist you on the project, or like
when I first started, I went to a shark because I felt I wouldn't have felt as bad if I made some mistakes and maybe the return I gave them was less than I wanted it to be. But I didn't feel as bad about it because, and this never happened, but this was my thought process. I don't feel bad for Kyle. I told Kyle, I've never done this. Kyle has done this. He's in real estate. He knows all the things that could go wrong. We took a calculated risk together. He made money, but not what we hoped that he would. But he understands, because he's an educated and sophisticated investor, that the return we thought we were going to get doesn't exactly always come in the way we thought. As to where if I would have done it with a person who just had money, had never invested in real estate, like I'm just going to say, like Alex. Okay, well, Alex wants that 15 grand. You said you'd give me that $15,000. No, I want my money. You said if I would let you borrow 150, I get 15,000 at the end. And you say be done in a year, so you better be done. See how a person who's never been in our business, they don't understand the fluctuation and the pivots and all the little things that go wrong, and how this is part of the business, overcoming problems, overcoming hard situations. We're going to get it figured out, all of that stuff, right? They don't see it all. So I'll go with a shark if I'm new, because brother, you knew I was new and I was going to make some mistakes possibly, and I tried not to. The second reason I would go with a shark, and this is more why I have never really had to do the first one. The second reason was, you know how to do something that I don't know how to do. I know this deal works to do that specific strategy, but you've actually done like 100 of these. So I'm graciously going to offer you 50% of the profit. And I'm going to meet all your contacts, see exactly who you use. I'm going to shake hands with all these people, and I'm going to be your general contractor over this deal. That subdivide, that netted 330, I met an engineer. I met a specific attorney who works on things for that. I met the connect at the water supply company. I met the connect on with the mobile home company who was pre-selling the lots. Built a relationship with the general manager. The general manager at Titan Factory, that mobile home company, would have never even had lunch with me if it wasn't for the developer who said, fine, boy, I'll let you be involved. This is what it looks like. Hey, have y'all met Mark? He's my partner on this deal, y'all. Oh, how you doing, Mark? I didn't realize you were in land. So I got to meet all these people who were already doing trades within subdividing. So now when I find one, do I need that shark, Kyle?
No.
Because here's what I realized. That dude has trade guys so good at their jobs in the subdivide. He doesn't do, all he does is watch the numbers and make sure the numbers match. He didn't actually do any of the work. The engineer showed him the most profitable way to cut up the land. He didn't even come up with the way to cut the land. Then he took that to Titan Factory. Titan Factory gave their opinions on how the engineer was saying was the best way to cut up the land. The engineer had the relationship with the water company that cut us a 15% off deal on all the water that we were having to bring in, the 40 grand we had to spend on that. So I'll work with a shark if it's something I've never done before. Does that make sense, y'all?
Yeah.
Because I want to win, even if I got to lose money, you know, or give up equity. I want to win. I want to have a successful project. What else we got, y'all?
Okay, so sorry, I had to leave and come back for a little bit. What was the shark? Who's the shark?
He was a guy who subdivides a lot of land. Kyle's question was, and this is going to be recorded, we'll put it in the system, y'all. Kyle's question was, when you work with a shark, why do you? Is it because like it was something you did just because you were new, or was
Right,
it because they offered something? Why would you give somebody, for instance, half the profit? I was
right.
like, that's a great question. If I've got land and I know it works to be subdivided, and I know the amount of money that could be made is super high, but I've never subdivided land, I'm going to go bring in a shark who I know subdivides land, who I personally know does, not a guy on Instagram who says he does, a guy who does it, because that person is going to have the contact. So I'm going to take those resources, learn from them, and now I can do that next subdivide myself.
So where are you finding this shark?
Oh man, public record. So for subdividing land, I'm in Atascosa County. I can find out the guy who placed deed restrictions on all of the land that was subdivided in any area of our county. And I know what land's being subdivided because I'm watching with the mobile home companies trying to move communities into those land, into those, pieces of land. And I'm on the MLS seeing some of them on the MLS selling, as quarter acre or half acre lots for $50,000. All I'm doing is I'm calling and talking to the right people to find the person. Find out their name, find out their info, or if I can't get a hold of somebody, I've done this in the past too, I'll see the attorney that drew up their documents on their deed restrictions, and I'll have my attorney call their attorney to say, my client wants to meet with your client. If their attorney's calling and saying, I had an attorney call me, this gentleman, Mark Dalmario, he's trying to meet with you. Oh, what's it about? Well, he said it's about subdividing land. Well, that's what I do. For in his mind, he might have 50 acres. Hey, I'm gonna go meet this guy. And so now we build relationships from there. This guy that I met, his hardest part is finding the land. I had already done the hardest part. When we signed contract and agreed, and not until after we agreed, he said, boy, I'm glad you signed that, because you're about to find out how easy this is and how you could have done it without me. And I laughed and said, we all think it's going to be gravy, man. I don't believe that.
Okay. So you're just calling him a shark because it is anticipated that he will take half the deal, not.
I'm calling somebody a shark. A shark is someone who already is involved in some way in what you do for a living. They're a professional like we are. They know their value, and they want to make you pay good money for them to be involved. Someone who's not a shark is someone who's not involved in the industry that we're in, and they're happy to make a 7.5% return on their money every year. 7.5 sounds great. Yes. How many sharks will take 7.5 APR, no origination? None. None would do that. They want 15. They want 17. They want a point and a half on a 6-month extension.
And see, and we just offered it. That's just what we were offering, just because of how our deals are, but
Well,
we
you
could
had
have
a better
probably gone
deal.
lower.
You
Yeah,
could
no,
have, yeah.
we really only take deals that we can make big licks off of, and people are jealous, but it's because we find the deals, right? So that's just, it is what it is. And then I just feel as though it's more enticing, and I get all the origination and all that stuff. I've done the course for being a business purpose loan broker, so I can find people money. If y'all need money, I have a whole list of connections. But at the same time, I haven't used them, you know.
Yeah, and this strategy, learning to raise money, being responsible, keeping
Mhm.
an attorney involved in everything that you're doing so that you're above reproach, I would say. This strategy will put you in a position where you go pitch somebody. I pitched somebody on $500,000 for the mobile home development I wanted to do, buying all these city lots, dropping mobile homes, turn that money, turn. No 90-day seasoning on FHA because we're considered a builder. I pitched them that deal at $500,000, and then I told him, but I'm going to do one so that there's proof of product, right?
Mhm.
He's in negotiations with the attorney that I work with to contribute $5 million towards what I'm doing, but he
Yeah.
wants it diversified. So like, I would have never walked into Chase and said, I want 500 grand for this strategy, and them
Right.
come back to me and say, we'd like to
Take
give you
$5
$2
million.
million.
Right.
But when
No,
you talk to normal people, they leave a meeting and say, I like that guy. And I use you as an attorney or have in the past, and I know you're smart. I'm going to call his references and send my finance guy to take a ride along with him because I'm considering giving him $5 million in December. And I'm
nice.
like, 5 million? What am I going to do with that? He said, I don't care how you structure it. I want to be involved with you long term because I feel like I want a partnership. I feel like this is going to be a lucrative thing for me in the long term. I don't mind giving you a good deal on the front end because I want to work with you. That's literally what he said.
I will say that the first page that you presented was the most helpful. So I'm involved in different groups, networking, whatnot. One of them is multifamily, just from wholesaling multifamily properties or apartments, you know, but some of them are okay with investing. And so I come in, I'm not really dealing in multifamily, but I still go and network with them. And so I'm just like, yeah, well, I have this wholesale deal, blah, blah, blah. They're super interested, you know. So I think I can put together a sheet like this to say, hey, well, they're trying to figure out how to give me money. I'm like, I don't want any money right now, you know, but I think I can put together something like this on at least a deal by deal basis. And that's why I was telling Aaron, I was like, well, maybe I wouldn't have to sell our house. We put our house on the market to try to sell so we can put more money into our deals and then we can leverage family money or whatever. But we just want to.
Yeah, so yeah, I understand that. So let me tell you, I'm so glad you're in this class. I would recommend not doing that. I recommend obviously attend these classes, but if you're looking to jumpstart it, I would recommend you know, getting on something where we have preparation and then I literally help you implement what I'm talking about. The breakdown of our next of all the classes that are going to happen over the next few weeks. I mean, I'm going to teach you all the things that you're talking about. So I already have them set up in coaching archives for Steve Trang's folks. And I mean, the topics go from what we just covered today to, so why raising capital is important, the trust factor in raising private money, Mark's credibility packet for prospective clients. You're going to see my credibility packet that I use. How to present an opportunity to prospective investors is another week. Frequently asked questions. April 20, or the next one, marketing yourself to find lenders. How do we jumpstart stagnant raising? Showing docs on business loans. Recovering the credibility packet. Discussing how to get in the money game with people. Standard information to work through to raise funds. Using a specific selling framework to help people get to a place where they're asking you about what you do so that they want to know, and before you know it, they're asking if they can give you money, and you didn't even ask them for money. Jasmine, the fact that you're saying people are like, I'd like to give you money, you're like, I don't know, I'll let you know. Like, that's all part of a whole framework. Everything I'm doing is very intentional. The things I'm saying, how I'm saying them, like they're going to, most people ask me to meet with me, and I've been planting that seed for the last 2 months. I knew they were going to ask me to meet with me. They just didn't know. And there's a way to do that. And then trust factor in raising private money, using private money to become a shark lender, teaching and implementing a plan to raise money, raising money, giving you a more predictable income. Like, these are all things I'm going to talk about in this community. I always tell people, everything I just taught you is enough for you to go and do it yourself. But if you want preparation and implementation, that's going to take me 10 months. And so that's something that I've talked to Aaron about. Where do we go from here? If this is something, a real mentorship that people want, what could that look like? And I'm not really sure myself. I'm being like you, Jasmine. I don't know yet. But I do know that I can prepare people to get there. It'll take me 60 days to prepare you. It'll take you 8 months that working with me on implementation. Within that 8 months, you should, I mean, depending on you, if you're not new and you've been doing a little while, I mean, you should be able to raise at least $500,000 in 8 months. What would 500 grand of promised capital to do deals do for your business?
Yeah, I mean, it'll definitely be good because, you know, you get to a situation where you look back at the deals that you have wholesaled and see the profit that people have made. You look at the ones that you've been able to flip, because obviously you get to be kind of picky with the ones that you do choose versus the ones that you do wholesale. But then having that money to be able to actually do those ones are definitely great, you know.
Mm-hmm.
So you just have more options. And I mean, I do like the story you're talking about as being the one where you do have the option to be a buyer, or if you don't get your price, whatever, like it's not a big deal if the buyer is not interested because you can just do the deal yourself type of situation. So yeah.
So maybe don't sell your house if you like it. You could probably raise money pretty quickly.
Mark, I have a question for you regarding selling from one company to another. Why do you recommend selling an assigned contract to another one of your companies if you're keeping it to flip yourself?
Two reasons. Every company that I own, I have to treat it as its own. So I'm involved in that company, but that company's making a business decision. My father has more trouble with this than anybody in our businesses because he's like super old school Mexican dude. He's like, hey man, why is STX Home Solutions charging a $5,000 fee to B&M Investments to take down that property? Dad, Kyle would have paid $12,000 assignment on that. $5,000 is nothing. Well, I mean, we own both. It just sounds stupid to me. Two reasons. Reason number one, we need to replace the money spent in marketing that STX Home Solutions spent to find that deal. Two, we need to pay the salesman who was involved in bringing that deal in, like my sales team, right? But reason number three, we want our businesses generating revenue, because what is truly the long-term goal? Of course, it's to use people's money, but yes, we want bank money too. And if our businesses aren't generating revenue, do you think banks are going to want to give us money?
No.
That's why.
All right. Yeah, I'm taking down another flip and I'm buying it from myself. So where do you establish a different corporation, or do you just have one corporation for that wholesale company?
I have one, that's the wholesale company, and then another that handles the flips. One sells to the other. And then and now we're talking attorneys. I'd recommend getting a real estate attorney to take a look at what you're doing. And if you're looking at growing or you're starting to grow significantly, then you're going to want to have different LLCs in charge of different pieces of yours. Like people will start series LCs where they only keep 3 or 4 properties in one series, so that the mitigated risk is just to that specific series. That's something that my attorney's been recommending to me.
But that's on your portfolio, right? The series?
Yeah. Mm-hmm. Okay. Let me say, I don't have a series.
Okay.
But this is what I'm being recommended by my attorney. Hey, Mark, you got like 17 flips happening.
Right.
All 17 shouldn't be in the same LLC, Mark. What if Alex falls looking at your property with you and breaks his leg? And now Alex knows he can sue that LLC, and that LLC is holding 17 properties with 50% equity in each one of them. So you want an attorney to help you mitigate some of that risk there. And you want to get to a place, everybody, where you're not using your money. Use other people's money. Now I said that, and someone may have heard me say this last class, and we're gonna end with this because I know it's already one. Some of y'all heard me say I turned down the $500,000 to use my own money to show proof of product on the mobile home thing that I want to do. I'm doing that because that is a luxury for me to do. Okay? Because I've gotten to a place where I know this gentleman who really wants to work with me has a lot of money. And I want to let him exclusively get to have some ownership in that branch. But because I'm in a position where I can do that, I'm going to take on all that risk myself because I know the payout is, 5 million, if that makes sense, right? I know the payout's going to be big. So that's why I'm doing that. Plus, spoiler alert, y'all just saw a doc for $500,000. So what money do you think I'm using to go show proof of product? That $500,000 that I just borrowed. So try not to use your own. Guys, if you got value, the way you can show me you love me, the way you can show me I want some DocSmart, go into the school app and share some information that you learned and tell people you need to be in this class. Support me by going out and talking about what you just learned in our school community app. And for those of you who want to see me raise money, if you are on Facebook and you find Mark Camarillo, that is my biggest money raiser. This is the random dumb stuff I do there. Mark Camarillo.
Mark, can you ask Aaron to maybe guide us to where you are at? Because I tried to go last week and I couldn't find you in there.
Couldn't find me in the school app?
No, I'm looking at community and classrooms, and
Right. I am uploading the videos into YouTube so that I can give them to Tay so that she can put them in as
So you're not in school app
recorded
yet?
calls.
So you're not in the school app yet, where we can put information?
No, I'm in the school app. No, I'm in there, and you should see me. I made some announcements in there.